I'm Alice Trades, and in this video, I'm going to show you guys exactly how to take a trade step by step. So by the end of this video, you'll know how to size a trade properly, where to place your stop loss and take profit, and how to use the three main order types. So before I start with any trade, I always start with the risk. Not how much I can make, but how much I'm willing to lose on the trade. So this is the position sizing tool on TradingView. This is a long position tool and this is a short position tool. So the long position tool is when I want to take a buy position and expect price to go higher, while the short position tool is when I expect price to go lower. So I'm going to drag it. So for example, if I want to take a buy position, I'm going to drag this bottom half to where I want my stop loss to be and the top half to where I want my take profit to be. So let's say I'm risking $200 on this trade. That means no matter what happens, the maximum loss I can have on this trade is $200. Generally recommend risking 1% of whatever account you have to keep you in the game. So for a prop firm account, you generally risk 10% of the available drawdown you have. So if you have a 50K evaluation account with a $2,000 drawdown, you'd risk $200 per trade. That means you need to lose 10 times in a row to blow your account. So this is how professionals survive long term. And every trade is just one of many. There's no gambling involved. So let's talk about what a stop loss and a take profit is. So my stop loss is where my idea is invalidated. So if the price hits this level, I'm wrong, and that's fine. So when it hits, I'm automatically taken out of the position at the price where my stop loss is set to, and I've lost the intended amount I intended to lose on the trade, which is $200 if I size my trade correctly. So the stop loss exists to protect your capital, to remove the emotion, and to keep you in the game. So what is the take profit? My take profit right now is at this level, and that's where I expect price to slow down or react, or it's just reached the point that I expected it to reach. So let me give you an example of this. So if I want to take a buy position right now, and I think my stop loss is going to be at this low. So now I have to take a 3 contract position to risk this intended $200. So if I take a buy position, I can put my stop loss here, which is almost exactly $200, and my take profit up at this high. So when it hits either of these, I get taken out of my position. If it hits my take profit, I make $300, and if it hits my stop loss, I lose $200. So now we're going to be getting into the 3 different orders that exist within the markets. So the first order type is a market order. A market order enters the trade exactly when you want, immediately at the current price. So you use this when you want an instant entry into the market and you don't really care about tiny price differences. So the only downside of this is you may get some kind of slippage. So for example, this is a market order. I just click the buy position and I can enter exactly at that price. The next type of order is a limit order. So a limit order is when you want to enter the market at a better price that's currently offered in the market. So for example, right now the price of Bitcoin is 736. So if I wanted to enter at 724, I would just place a limit order here, a buy limit order, and put my stop loss and take profit where I want it to be. So when price reaches this position, it's going to enter me into the position. So this means I want price to come down to this level, then enter it. If price never reaches it, the trade simply doesn't trigger. So this is great if you want a better entry into your position and you want less emotional trading. So right now I'm entered into this position and now price can do whatever it wants to do. So the final type of order is called a stop order. And a stop order triggers only after price breaks a certain level. So if I want to place a stop sell order, I would go below the current price and click on this. So this would enter me into a position right when price hits this level. If I wanted to place a stop buy order, I would go here, press this, and take this position. So once price reaches this level, it immediately triggers me into my position. Let me just do this to show it to you all. Yeah. So the only issue with this is sometimes if price moves too quickly, you can get slipped a little bit, and therefore enters a little bit at a little bit worse price than you actually intended it to. But this is what you would mainly use if you're trading fast markets or you're a breakout trader. So those three orders are the three main types of orders used. You should also remember, regardless of whichever type of order you're using, your risk management is going to be the only thing that saves you in the market. So if you master your risk management, the position sizing, and the execution, you're already ahead of 90% of the traders here. If you found this helpful, drop a like, subscribe, and I'll see you in Bootcamp Day 3.